So we did it. We got out of the bear market and we are now at new all-time highs in the S&P 500. And as well as that, for me, my account is absolutely flying. My account's at all-time highs and it's been a very good recovery after what has been an awful 2 years. And I said to you guys, after these 2 years have passed, I'm going to make a video just saying well done to me. Well done to me, because obviously, you know, there's been times in the last 2 years where I don't want to be in front of this whiteboard, you know, making videos, talking about the stock market after I've seen my account down so much in that bear market. And well done to you guys, because if you're watching this video now, you're more than likely, well, I'd say about 90% of you guys have made it through the bear market, and there's been a lot of people that along the way have quit the stock market for sure. And even though, you know, you preach about the best times being in the stock market to buy in the dip, which if you have bought any of those stocks in the big dips, you probably made good money from it. And even though those are taught the good times to buy, everyone says they're going to buy when the stock market crash happens. We got the worst stock market since 2008, and you know, a lot of people went seeing the stocks go down, seeing their accounts go down, and when it's actually real and it's there, and you're seeing your pounds or your dollars if you got or euros, and you're seeing them go down, it's a different story then. So yeah, I thought that we'd have a video today reflecting this and me, you, the whiteboard. I know some of you guys really like these videos, some of you not so much, but I think it was a good time to reflect on the market in the last 2 years, because it's been a tough time. And when we did reach all-time highs in the S&P 500, I said we'd have a video to reflect on that, and today is going to be that video, so I hope you enjoy it. So for me personally, I started getting into the markets in 2016. I classed 2017 as my first full year in the markets, and for me that was actually a really good year. Made a lot of money in the market that year. Really good year in the market. That was really good. 2018, that was the first time I had experienced a bit of a declining market. I think the market was negative that year, and it actually, the market, the S&P 500 actually closed, I think it was 0.1% off a 20% decline. So 2018 would have actually been registered as a crash if it had dropped 0.1% more, which was absolutely crazy. So I do kind of class that as a bad year in the market. It was a bit of a tough year in the market that year. So that was the first experience that I had of a bit of a tough market in that period of time. 2019, a really good year in the market. If any of you guys were in there, market seemed to rally massively during that time frame. 2020, I'm going to put an X next to it, even though it was a good year in the market, just because there was a crash in that market. The crash was very short. You know, you were talking a 3-month crash when the CV situation happened. After the 3 months had passed and everyone kind of went, oh, it's not actually as bad as what we thought it were going to be. It's still bad, but not as bad. Obviously, the stocks then rallied up, so it was a bit of a V-shaped recovery. So it didn't. If you went from January 2020 to December 2020, you would have gone, it's a good year. But there was a part of that time where there was a 3-month period where you were going on your account and your stocks were down 4-5% every day, and it was for a good couple of weeks. And there was positions I had from these years that in 2020 was like up over 100%, and they went down in the red. So it was a tough time, but it didn't seem too tough because it was, you know, a short period of time. 2021, I'd say is a good year. It was a pretty good year at the start of the year. Bit of FOMO creeping in during January and February. As the year went on, the back end of the year did start to get a little bit tougher. So that was a bit of a mixed year, but I would say there's not a major issue because if you remember, there was a lot of small caps dipping in that time frame, but the indexes held up high, so it kind of covered the cracks a little bit. So we'll say it's a good year, but there was times where it was tough for sure in the small cap space at the back end of the year. 2022, whew, that was a tough year. That was a tough year. That whole year, I mean, that is the worst stock market I've been through. The fact that you were, I mean, you already had a tough period of time where 2021 was a bit rough, but then you had all the major indexes dropping. But the other thing, and especially for me, I have been, the last few years, my portfolio's rotated a little bit. I've got a bit more confidence in the market nowadays, and I try and pick the smaller stocks with a bit more return. Granted, that comes with a few more risks with the smaller caps, which has increased the returns I've had, but also increases the losers, which is definitely something that has happened in the last few years. But by then the indexes then started going down, and then all the small caps went even further down, which was tough. And then 2023, really good year. I mean, my best year in the markets were probably 2020. 2017 was a really good year. I think 2019 was a good year, and 2023, really good year. I can't remember exactly the year-to-date return I walked away with. I made a video on it, but I think it was about 40%, which was really good. If someone said to you, you're gonna make 40% this year in the market, you'd go, yep, I'd have that. So yeah, that was a really good rebound. And obviously this year as well, obviously the markets so far have been pretty good as well for stocks so far this year, which is made 2024 so far a good year. But we're only a month in, so we won't go too far for that. But 2022, absolutely terrible year in the markets. Really, really rough. It's one of those as an investor that you always know there's going to be, when you're in the market, you are going to hit a horrible crash. You just don't know when it's going to come. And in 2022, everyone was quite optimistic for it, if you remember. Nobody was saying 2022 was going to be a bad year in the market. And you always know as an investor you are going to hit one bad market, a bad crash. You just don't know when. And obviously we got it in 2022. When the S&P was down massive, the Nasdaq were down. It was brutal. And I just wanted to talk about a few of the things that I noticed and I'm going to take away from that 2022 stock market crash. So the first one is, and I didn't really expect it, I knew this was to happen, but I didn't expect it to happen as much as what it did. And that was, everyone's a bear in a bear market. Everyone's a bull in the bull market. It's really hard to find bears in the bull market, but everyone's a bear in a bear market. Like, all the bulls disappeared. I remember I was making videos in 2022, especially like March to November, and I would talk about DraftKings at $11, and nobody was like, yeah, I think it's a good buy. I remember talking about Meta like at $100, going, I know that Meta have some problems, but I think it's ridiculous now. It's at $88. 11 times earnings, I think it went all the way down to. Hims and Hers at $3. I mean, the comment section was full of people saying it was going to go bankrupt at $3. And I was making a video and I was seeing people bearish on Hims at $3. It was absolutely insane. And what really surprised me is the fear that took over. The fear in, because I get to see retail investors massive, because I have so many people that watch my channel. And it was really hard. Apart from, the only people I saw bullish still on the market was a couple of people in the Discord of the Patreon. That was the only time I saw a little bit of like, it's probably a good buying opportunity though, isn't it? Everywhere else, especially like on the YouTube comments, I tell you, you go back on some of those videos from 2022 and you go on the videos talk about Meta at $88, and it's really hard to find people that are bullish, people at $88 saying, yeah, it's going down to $30 on Meta. It was incredible. And that really surprised me. The amount of times you get taught about buying opportunities on stock market crashes and bear markets, and then we have one and there wasn't a bull in sight. And that surprised me massively. The next thing that surprised me, and it wasn't really to an investing point of view, but just as a kind of someone that makes videos on the internet, on YouTube point of view, I didn't realise, like, you hear about all these horror stories about the internet and how it's an awful place and the things that get said. I didn't really realise how bad it was until we hit a bear market. And I guess this space, in a bull market, there's going to be probably someone that comes on the internet anyway and says something, you got to take it on the chin. But the hate that happened in the bear market was insane. There's only probably one person that knows this, and I've told them this. But I generally, in 2022, I said to myself, I'm going to quit YouTube. I wasn't going to do it when a lot of other YouTubers were quitting it, right in that bear market, because I felt that was a bit of a coward, a bit of a chicken, and I didn't want to do it then. But I said to myself, when we get to a bull market and the S&P gets at all-time highs, which obviously happened 2-3 days ago, I'm not going to do YouTube videos anymore, because I went, for me, for the work that I put in, and I only earn, £300 from doing YouTube for how many videos, it works out about £3 an hour. I was like, it's not worth it for me to do it, because the stuff that got said to me on the videos were insane. And I don't know if people were just so beaten down, because what I think it was is that there was a lot of people beaten down of the market going down, and they just needed somewhere to express their anger. And I think that's what happens. And I think eventually all those kind of bullish people in the bear market turn to bears, and the bears need somewhere to vent somewhere. and create the pressure of stocks going lower, but also put their negativity on people. And I think I saw that in tons in the comment section a year ago. And I said to myself, I said, you know what? I had even friends and family that came and said, like, because a few of them watched the videos, and like, I've seen some of the stuff like the people saying on like the YouTube comments, like, hey, are you all right? And I was like, yeah. I mean, there's just angry people out there, you know. But it took me by surprise to see how much I got. And I was like, I'm going to stop making YouTube videos when we get into bull market. I wanted to wait until we got into a bull market, because then I could go, hey, I've seen it out the other side. All the stocks I talk about in the bear market for the ones that I'm buying have done absolutely amazing. You know, DraftKings I bought, Mercado Libre I bought, Hims and Hers I bought, Meta I bought, Google I bought, Celsius I bought. All those stocks are absolutely, you know, have flown. The ones that I made a priority in 2022. And obviously the account's doing absolutely amazing now. And I wanted to go out on a high and kind of like, you know, hey, you know, I told you we'll make it through the other side. I made it through the other side. And then, like, you know, a good point to go on. But now that we've actually made it through the bull market, obviously, as you would expect, now we're on a bull market, obviously the bears have all disappeared. And I thought, you know what, you know, I've got all these stocks that I put on the internet for free that have done absolutely amazing. Let them ride. You know, this is only 1 year in the bull market. You know, imagine what some of these stocks are going to be doing in 3-4 years. I'm going to have stocks that are going to be, some of these stocks are going to come 4 or 5 baggers. And, you know, at the end of the day, you know, take the applause. You know, I stuck there in the bear market when everybody was quitting YouTube. You know, I got to take the credit for it a little bit. And I thought, you know what, that's right. So that was something that even went on with me. But honestly, like, the hate was absolutely insane. The next thing was diversify. I tell you, you see and I think this is why a few people got really bearish on the market, is you see who lacked diversification in the portfolio. You know, if you ever look at my portfolio, the UK portfolio, I think it's got 15 stocks in, maybe a little bit more than 15 stocks. The US portfolio's got about 25 stocks in. So both portfolios I do on YouTube are very well diversified. And for me, if I ever hit a situation where I have a stock that suffers in a tough economy or a tough stock market, it stings, but it doesn't hurt as much. And for me, what really helped me is to diversify. I never got stung too hard by one stock. You saw a lot of people, a lot of channels that certainly just talk about one stock in particular that had, you know, half the portfolio in one stock and it got killed. And now that we're in a bull market, they still haven't recovered from this 2022 crash. You saw people that sometimes see high risk, high reward stocks, and they make them, you know, they take up all this side of the portfolio, high risk, high reward stocks. And, you know, obviously some of those stocks that are high risk haven't done well in the crash situation, and they've been stung. So there's definitely an element where diversification was key in that crash. And if you ever need an example, once again, of diversification is key, just look back on that crash. Massive. The next thing is getting things wrong. There's an element of, you have to accept that you're going to get investments wrong. I think Peter Lynch says, you know, 6 out of 10 is good. You know, getting 6 right and 4 wrong is good. I would like to be a little bit more right than that. But what showed me is that you find that you got things wrong a lot more in a stock market crash. You then start to see which stocks you've bought, and you look at and you go, wow, what did I buy that for? That was stupid. That stock is a bad stock. And when you see the environment gets a little bit tougher, you see which are the stronger companies, which actually have a bit of a moat and which don't. And that's the big thing that showed me through that time frame. And there was a few stocks that I bought, especially in 2021, that I looked at. I had about 4 or 5 stocks that I bought, and I went, what did I buy that for? That's been an absolute shocker, that. And especially stocks that are more high risk, high risk, high reward, and the high risk side comes from maybe not a great balance sheet, maybe they're a little bit off profitability, and that tough environment pushed that profitability down even more, and you saw the share price get hit. It really does show it in that recession, and you got to really look at some of these stocks and go, would that do well in a tough environment? And that definitely stuck with me. But the other thing is that, like I said, diversification for me, even though that I had some stocks in that period of time that performed very poorly, what I was able to do is that I didn't allocate a big portfolio to it. I was able to keep the portfolio diversified. So my bad performance of stocks came from around about 15% of the portfolio, 10% of the portfolio, which it's something that personally for me, I look back on and I go, that needs to go better next time. But at the same time, it could be a lot worse, because if I had that allocation to 50% of the portfolio, I'd be still trying to recover from that. So diversification is key, but also a crash will reveal which stocks are not going to perform well, and also accepts that you're going to get things wrong. That's the big thing. That was the key thing, that you are definitely going to get shown a few stocks that are stinkers in a crash. You look at Netflix, Bill Ackman bought Netflix during the crash, panic sold it, and look at where it's up, right now. Look at Warren Buffett, even the great Warren Buffett, CV situation happened, panic sold all his airlines, and look at how much they all recovered. Didn't need to take the loss. So you've got to accept that all the great investors and you as an investor will make mistakes. It will happen. The key thing is just to make less mistakes than the ones that you get right. That's the key thing. So yeah, 100%. That's something that I took on board. Best stocks in bear market. So what I found as well is that you can identify better opportunities in bear markets, because you look at all these stocks that are struggling in bear markets, recessionary environment, but you also look at the stocks that are bringing financials out. And in 2022, what happened is we had stocks that were bringing financials out that were beating EPS, beating revenue, raising outlook. But the great thing about that stock market crash is that you're having stocks that were doing that, and even sometimes would go up in pre-market on the results, like 5-10%. And then the stock would, by the end of the day, be negative. And then for the next 2 or 3 months, it would keep dropping and dropping and dropping. And then bring another set of results out, beat EPS, beat revenue, beat outlook, go up, pre-market, down again. Hims and hers. Hims and hers kept going lower and lower, $3. And what did you have there? You had a great opportunity. If you bought that stock, you've had a 2-bagger there. You have opportunities created, and you get to see which stocks can really perform well, still in a very bad environment. And that gave the opportunity where, sure, you might get things wrong and stocks go down, but you have stocks that you can easily make over 100% on by buying in that sort of dip. Look at, for example, me. I bought Hims and Hers. Stock from buying in that dip, up 100%, sold out 10% of my position. Meta, Celsius, Mercado Libre up 70%. There was all them opportunities, and the great thing is buying on the dips is when things turn, and things do turn quickly, as we saw from a bull market to a bear market, from a bear market to a bull market, they can change very quickly. Sometimes you can buy those stocks at really good valuations, and it's surprising how quick, these beaten down stocks, you go, wow, what a buy that was. So I think what is the big thing is that it helped identify those opportunities that were really good stocks that just kept going lower. And you were able to buy a good batch of stocks where you went, those are the ones I want to buy. Those are the ones that are financially performing that I need to focus on buying. And that's where, when you saw me in the last few years, when I've been doing the stocks and buying series, and I've been able to buy the likes of Google on the dip, being the likes of Meta, DraftKings, Hims and Hers, Mercado Libre, being able to build up those positions as well. Next thing is, it can go lower. Sometimes I remember DraftKings was getting towards $20, and I was like, it can't go lower than $20. Like, this stock should be a lot higher than this, and it's going down, and anyway, 18, 16, 14, 12, 10. I think it even went to 9. And I was like, pff. And I remember going at $9 going, this is crazy. And then I thought, it can't go lower. And then I went, no, I said that $20, and it keeps going lower and lower. And that's the key example. When you're in a bear market, when you think like stocks can't go low, when you go, nah, that stock's never going to go to that valuation. When you go, oh, PayPal's never going to go to $30. I mean, it's not gone there yet, but you never know. So that was definitely a big thing as well. Next thing, cash. Having cash was key to buy the dip. The other thing is cash generation. Having a lot of income streams, having cash available, massive in a stock market crash. And what I definitely will remember is that having cash is king, and having incomes as well. So you have that cash coming in all the time to buy the dips. It is very, very important. And for me, in 2022, I said before, I worked crazy. Like, I told my girlfriend, I said, we're not going on holiday. I need to have as much cash as possible to buy these dips. I remember any overtime that was going on at work, I was like, I'll have the overtime. And I was buying, and that helped massively with the rewards as well. And the next thing is always expect the unexpected. When you look at 2020, 2021 into 2022, everybody was saying it's a good year. stocks are going to go up. Everybody was telling you that thing. What happened? Bad year. Worst market since 2008. 2023 happens. Everyone says it's going to be a bad year. I mean, by the end of the year, we might be all right, but it's still not looking good. 2023, we were smashing it from the start of the year. So when everyone says it's going to be a bad year, good. When everyone says it's going to be a good year, bad. And once again, it shows you that opposites, where the market sentiment can massively change very quickly. And that's why the only thing you can do is, rather than going, what happened this year? What happened this year? What happened this year? Rather than that happening, long-term investing. Hold it for the long term, and all these little dips that happened in 2018, 2020, 2022, it looks nothing on a long-term basis. You look at a lot of stocks from 2017, 2023, you walk away, you ignore what's going on, and I can tell you a lot of stocks from the valuations in 2017 to 2023 are a lot higher. And that's when you get to ignore all the dips and the chaos that's going on in the short term, and all the noise, and all the people that think they can forecast what's going on in the market. They can, as what we've seen. So yeah, hope you enjoyed this big recap on this bear market. We are all-time highs in the S&P 500. My account's doing amazing. I hope yours is. Well done to any of you guys that have made it through. And yeah, it was good to make a bit of a happy celebration video after all them negative videos I had to make in 2022. I said in them videos, we'll get there one day. We'll get back to all-time highs at one day. This is the day. See you in a bit.